For the month of April, so far we have seen some of the macro data coming out of US and India as well. So US clearly we are seeing some amount of recessionary build up happening in the incoming data uh, in terms of the growth numbers, which obviously could have impact on the global economy. Though it's not very clear right now, these are mixed signals, and it is too early to say that US is entering into a recessionary phase. But there are possibilities which are building in. Similarly, if we talk of India, we have seen inflation data coming out, which was much below the RBI's expected line, and because it was lower than RBI's expected line, the possibility of another rate cut increases, and which will have impact on the yields going forward. Though one cannot expect much from the yields right now because of the fact that the borrowing calendar for the first half is quite heavy, and then we have an election which are going on right now. So the new government will come out with a new borrowing calendar post budget, and I think that will decide the final supply side dynamics. But having said that, it is going to be on the higher side, and which will continue to put pressure on the yields on the higher side. Though we expect RBI to cut another 25-50 basis point depending on the data, but it will not yield in much of capital gains as normally which happens when the rate cut happens. If you talk of the equity markets, then what we are seeing right now is a bit of plateau kind of market right now, because the election season is going on, and we will come to know about it in the month on 23rd of May. Mostly market right now believes that the NDA is coming back to power in some form or another. That's what is discounted in the price right now. In that situation, anything which is outside this assumption, which means that A, NDA is not coming to power, B, BJP alone or NDA put together crosses 300 plus seats. But that is what could surprise the market, and any kind of surprise will lead to heightened volatility, which could be on the lower side or the higher side. Right now, the odds, as I said, what market is pricing is with the continuity, and I think if that happens, now market should stay where it is, and the focus will again shift to the financial results, margins, and which anyways the result season is on. Some of the results have been declared so far, at least for our portfolio companies. The trajectory has been decent. We expect the volume growth and the margins on the slightly higher side than last quarter, mainly because of the fact that the capacity utilizations have been on the higher side. The currency has been stable for last quarter, and all other external demand factors so far has been in order. But yes, we it is too early to comment on the results right now, because there are only few results which have been out. There is a lot more to come, which probably in the month of May we will see. So if I summarize what is going to happen in May, A, we have results which are going to come. B, we have election results also which are going to come. Traditionally, we have seen that the noise around election is not for long. It comes up around and it fizzles out. So I think in whatever happens to the election results, market will react to it for a month or so, and then will move on again to the basics, which is financial performance of the companies, which I think for the coming year looks better than previous year, and which should keep the market on the positive trajectory. And this I'm talking of post the election results, the volatility is out, and one should expect a normalized return from the equities market going forward. So, in terms of the allocations, as I said, since we are talking about a stable market with a positive inclinations, I think post election results, I think people should continue to remain invested right now. It is not good to take punt based on some event like elections and all these other things, which in the long run does not matter. So rather than trying to time the market pre-election, post-election, if you are a long-term investor, if you have surplus, I think you should continue to invest. Whether you like the staggered approach in the volatile market, which is usually preferred, I think that's what you should do right now, and not pay too much of attention to the elections.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.